The era of owning physical bricks and mortar is fading. The American dream of a white picket fence, a 30-year mortgage, and a two-car garage is being replaced by a new kind of wealth. A wealth that most people cannot even see. Welcome to the age of digital infrastructure, where the most valuable land on Earth is no longer where we live, but where the world's data breathes. Think about it. Why spend 30 years of your life shackled to a massive bank loan for a single property, dealing with property taxes, inflation, and repairs, when you could build a massive empire of passive income in just one decade? Traditional real estate is stagnant, but the demand for artificial intelligence and data processing power is exploding vertically. This isn't just a market trend. This is a once-in-a-generation economic shift. I'm Andrew, and today on Money Mind Matters, we are uncovering the exact 10-year roadmap to building your own sovereign personal fund through AI infrastructure. Forget everything you were taught about real estate. The rules of the game have changed forever.
To understand this wealth shift, you have to understand where the money is flowing. Every single time you ask ChatGPT a question, every time a Tesla uses autopilot, and every time a Wall Street algorithm executes a trade, massive amounts of data are processed. But data doesn't live in the clouds. The cloud is just a computer in a highly secure, heavily cooled physical building. These buildings are the new prime real estate. We call it digital ground. Now, you might be thinking, Andrew, I don't have $1 billion to build a data center. You don't need to. In the digital world, we invest in digital REITs, real estate investment trusts that exclusively own the world's most powerful tech infrastructure. Think of every share you buy as a digital brick. Together, they build a financial fortress that pays you rent every single month, without fail. And the best part? Your tenants aren't random individuals struggling to pay rent. You are effectively collecting rent from the richest entities in human history: Amazon, Google, Microsoft, and Meta. When you own a traditional house, you are responsible for the broken pipes, the difficult tenants, and the rising state taxes. When you own a digital REIT, professional management handles the hardware, while the tech giants sign 10 to 15-year leases, guaranteeing your cash flow. Your portfolio spans the globe, from the intense tech hubs of Silicon Valley in Northern Virginia to the rising data giants in Singapore and Europe. You own the internet's physical backbone. But how does this make you wealthy? The secret lies in a mechanism called the dividend snowball, accelerated by capital appreciation. Most retail investors look at the stock market and only see price tags. They buy a stock hoping it goes up and panic when it goes down. Digital real estate investors play a completely different game. We play for cash flow. Let's look at the math. If a digital REIT pays a 4% dividend yield, every time they pay you, you do not spend it. You use that exact cash to automatically buy more shares. This is called a DRIP, a dividend reinvestment plan. Those new shares generate their own dividends next quarter, which buys even more shares. Your money starts cloning itself. But with AI infrastructure, there is a massive secondary engine: capital appreciation. Because the demand for data space heavily outweighs the supply, the actual value of these buildings is skyrocketing. While the S&P 500 might average 8 to 10% a year, specialized tech real estate has the potential to far exceed that, simply because AI cannot exist without them.
Let's look at a practical example. Let's look at John. John is 30 years old. He lives in a major U.S. city where a starter home costs over $500,000. Instead of emptying his savings and taking on an 8% mortgage rate for a tiny apartment, John decided to rent his living space and invest $500 a month into high-growth digital infrastructure. $500. Instead of a luxury car payment, he bought digital ground. In year one, the progress seemed slow. John had $6,000 invested. The dividends bought him a few extra shares a year. But by year 5, the snowball gained mass. John's reinvested dividends were now purchasing dozens of new shares every month. Because of the AI boom, his underlying asset value had also grown by over 50%. His dividends began to cover his basic utility bills and groceries. Fast forward to year 10. While his friends were still stressing about refinancing their 30-year mortgages, John's monthly investments had transformed into a self-sustaining ecosystem. The combination of reinvested dividends, 10 years of consistent contribution, and the massive surge in data center valuations created a waterfall of cash flow. John didn't just buy a stock. John bought time. He reached financial sovereignty decades faster than his peers. He doesn't work for money anymore. His digital infrastructure works for him, processing the world's data while he sleeps.
So how do you actually execute this? You don't just buy any company. You look for the kings. You look for the entities that hold monopolies over the global landscape. Companies like Equinix, ticker symbol EQIX, and Digital Realty, ticker symbol DLR. These are the undisputed giants. They own the physical megastructures that house the brains of the internet. And don't forget American Tower, ticker AMT, which owns the 5G cell towers that transmit all this data to our phones. On Money Mind Matters, I filter these companies using 3 non-negotiable rules. Number 1, revenue growth above 10%. If they aren't growing, they are dying. Number 2, a safe payout ratio. They must generate significantly more cash than they pay out in dividends. Number 3, a global moat. It is incredibly expensive and legally difficult to build a massive data center in a major city. This high barrier to entry protects your investment from new competitors. This is a toll bridge business model. Every time an AI model is trained, every time a 4K video is streamed, a fraction of a penny flows to the owners of the infrastructure. That owner should be you.
But listen to me carefully. Stay vigilant. In every modern gold rush, there are traps designed to take your money. Beware of the dividend trap. You will see real estate stocks offering massive yields, 12, 15, even 20%. If a yield looks too good to be true, it is. A high yield is often a desperate siren song from a company in deep financial distress. They use that high payout as bait to lure in retail investors, while their actual business is crumbling. Eventually, they slash the dividend, the stock price collapses, and your capital is wiped out. Investing is about balance. You want a sustainable 4% yield that grows every single year, not a flashy 10% yield that disappears tomorrow. On this channel, we prioritize longevity. Protecting your initial capital is job number 1. Don't let greed cloud your rational judgment.
A decade is going to pass regardless of what you do today. The only question that matters is, where will you be financially when it does? Will you still be trading your time for a paycheck? Or will you be the landlord of the digital age? This isn't a dream. It is a calculated mathematical roadmap. Your journey to a digital empire begins with a single smart decision made right now. Time is your most valuable asset. The longer you wait, the more of that compounding power you lose to the clock. I've put together exclusive resources to help you start your digital infrastructure portfolio. Check the link in the description below to get started. I'm Andrew. Thank you for watching Money Mind Matters. Start building your legacy today. I'll see you at the finish line.